Hello everyone, Monty here from IG. This time around we're going to take a look at those weekly and daily market reports you've been receiving. Now the weekly market report is released on Mondays and it's going to give you a weekly overview, weekly levels, weekly sentiment, so on and so forth. Whereas the daily market report released on Tuesday through Thursday, and that's where we zoom in and we take a look at things more on a daily level in the short-term overview. So in terms of products, you can see there are plenty to choose from. You got the FX majors, you got precious metals, we got oil, indices, plenty more products on the way. And for the weekly market report, we also have Bitcoin as well. So let's go ahead and take a look at one of these reports though. Let's pull up a daily market report, and you can see that two ways. You can either scroll through it and see which product you want to take a look at. Second item you can do, however, is you can also click on the PDF on the front page for whichever product you want, and that will go ahead and take you directly to the product that you're looking for instead of having to scroll down every single time. There is a guide at the very end of the report, and on the weekly we also have the economic calendar and the market overview for the entire week, as well as what happened last week. So let's go ahead, let's take a look at the daily market report. We're going to pull it up. In this case, we're going to take a look at Euro USD, and we're going to interpret this report based on this one product. So let's go ahead and click on Euro USD and let's get started. So this first part, let's start with sentiment circles right above me. You see there's two of them. There's retail and institutional. Let's start with retail, and you can see that in this case, blue is for percentage long, red is for percentage short, but there are two circles. And with the outer circle represents sentiment as of today morning, inner circle represents sentiment as of previous trading day. This is IG's very own client sentiment figures, and it's always important to know how it's shifted over the course of the day. And in the case of the weekly market report, which is, as we mentioned, is released on Mondays, in that case, outer circle is going to be as of Monday, inner circle as of last week. So you're looking at it week on week and seeing how things have changed. Now, in terms of the way retail traders in general have a tendency to trade, this is something, of course, we don't advise, but a lot of times they have a big patience for holding on to losses. That has to do with our own psychology of how we have a tendency to not want to take on a loss, so we hold on to losses, but when we're in profit, we take profit right away. This is something we will discuss in more detail when it comes to risk and reward and risk management strategies, but that is something to note when it comes to retail sentiment. So with retail sentiment out of the way, let's go ahead and bring in institutional sentiment, and you can see in this case that it's based on the CFTC's COT report or Commitment of Traders report. And the two circles in this case, the COT is released on Friday, so that means that the outer circle is as of last Friday. So it's updated on Monday, but it's as of last Friday, and as of last Friday's report. And the inner circle is as of the Friday before. So it's a week on week change, and it doesn't matter whether it's the weekly market report or the daily market report. Those numbers are going to be fixed throughout the week because it gets updated every single Monday. Now, the COT is released and it gives raw figures. You know, for example, there'll be long 10,000 lots, there'll be short 5,500 lots. But what we do is, to make it easier, we convert it into a percentage basis so that you can see and you're able to digest it and interpret it more easily. However, in terms of the actual raw figures, we are going to post them in Monday's commentary section. So on the weekly market report, we update the numbers, and then in the commentary section, we discuss their long 5,000. They've reduced 7,000 lots, for example. They've upped their shorts in oil, for example. These are things that will be discussed in the commentary section on Monday's weekly market report. Now, a few things to note when it comes to COT traders, especially compared to retail traders. First off, they've got really deep pockets, and also they have a tendency to position for the long term. So they're not looking for very short-term gains. Retail sentiment changes very quickly day in, especially if there's something significant happening and the market moves, for example, 100, 200 pips. You can see retail sentiment shift quite significantly, sometimes by 10%. Whereas in the case of COT, it takes quite a long time. So unless you see successive moves, successive reductions, for example, in majority long buys, you're probably not going to see a shift in terms of sentiment from majority long to majority short. Also, we're taking it from larger speculative. This is from the speculative side of the COT report, not the commercial side. And lastly, when it comes to institutional sentiment, you have to remember that they could be trading a spread. It could be part of a portfolio. It doesn't mean that they're trading this certain product. If they're majority long, it doesn't mean they aren't going to be majority short or hedging somewhere else or trading some part of a spread. So we need to keep that aspect in mind. So for this next bit, we're going to be taking a look at the main technical indicators that are available on this report. Now, you might have a certain technical indicator that works for you, or a handful of them. That's totally okay. But in our case, we usually put some of the main ones up here just so people know exactly what other traders are looking at and what the market's saying from a technical standpoint overall. And it does help in terms of forming the overall technical overview, which we will get to in a moment. Now, we have the first one, which is MA short, or MA stands for moving average. So price relative to the short-term moving average is the 5, 10, and 20. In the case of the daily market report, these are daily indicators. So it's going to be the 5, 10, and 20 day moving average, whereas in the case of the weekly, it's the 5, 10, and 20 weekly moving average. So that's something to keep in mind whether you're looking at the weekly market report on Monday or the daily Tuesday through Thursday. Now, in this case, usually used for intraday strategies, and in our case, we are going to label it either as bullish, bearish, or neutral. What about MA long, or price relative to long-term moving averages, the 50, 100, and 200? These are usually used for intraday strategies, and in this case, again, it's going to be either bullish, bearish, or neutral. DMI, directional movement index, usually used in conjunction with ADX to determine trend strength and direction, but it's either going to be positive, negative, or neutral. And ADX, which is one of my favorites, average directional index, it has a tendency to, whether it's the market has a propensity to trend or not. That's really what it's showing. So there are times where, and it's either going to be trending or consolidatory, but there are times where it's showing the propensity to trend, but the other indicators are completely neutral. And usually what that means is, from a technical standpoint, assuming there aren't any additional factors, you might see breakout opportunities, or you could say that pivot points have a greater tendency to break because the market is showing a propensity to trend, even if it hasn't shown or revealed its direction just yet. For this next one, RSI, or Relative Strength Index, a lot of you have heard about this one, I'm sure, but it's a momentum-based indicator, and it's either oversold, overbought, or neutral. A lot of you are familiar with that terminology when it comes to RSI. Last but not least, Bollinger Bands, and again, you could be using a different type of band, you could be using some sort of channel, but in this case, price relative to the Bollinger Bands, and it's either going to be at the upper extreme of the band, lower extreme, or somewhere in the middle. Now, for this next bit, this part's crucial, especially when it comes to understanding the overall technical overview. So when you look at a technical overview, it's usually either bull trend, you're looking at bear trend, consolidatory, or it could be volatile, especially when there are significant fundamental factors at play. So in this case, if we take a look at the technical overview, a lot of times we tend to look at it as, oh, if it's, for example, a bull trend, therefore the market's going to keep going up. Not necessarily. We've seen that, especially those who are experienced will know time and time again, there are plenty of times that it looks like a bull trend and the market will go exactly opposite because a new factor will enter the market, or it could be that the bull run is exhausted, for example, and the market starts to come back down. Now, the way I like to think of it, it's kind of like business sentiment. If you walk into a city and you want to buy some real estate, and you're thinking, okay, what's the market like? Well, the market right now is bullish. Does that mean it's going to be bullish tomorrow? Could be, could be not. But a lot of times what's really important is to just have an idea, have an overview of what's going on in the market before you decide to go in favor of the trend or against the trend. So it's very important to understand that this technical overview can shift, and that's especially true in the short term on the daily overview. Weekly, long-term overviews are much more difficult to shift because, well, it's the long term. A really big move needs to happen in order for the overview in the long term to shift, whereas in the daily, it can shift much more quickly and much more easily, and there are a few reasons why. First off, could be fundamental factors like central bank announcements, or in the case of data, U.S. non-farm payrolls for U.S. dollar-related pairs. It could be, for example, risk-related flows. So, for example, if there's a risk-off move in the market, the safe haven yen will have a tendency to outperform, as will, for example, gold or bonds. And a third item, for example, could be commodities market. So, for example, if oil prices are doing really well, that will have a tendency to help the Canadian dollar because it has an energy underlying. So the key thing to understand is that eventually it's going to shift. You shouldn't think to yourself that, oh, because it's saying, currently it's a bull trend, therefore prices are going to keep going up, or because it's saying a bear trend, therefore I should just automatically initiate sell strategies. Not necessarily. You need to carefully weigh in and say whether or not, in terms of whether or not you want to go with or against the current technical overview. And it's here that we start to look at the technical overview conformist and contrarian strategies. Conformist strategies are those that are designed for those of you who think that the market is going to continue with that current technical overview. So, for example, if it's a bull trend, then usually conformist strategies are going to be buy strategies because you believe that the trend is going to continue upside. However, if you're a contrarian trader and you say, no, I think it's going to go opposite, I think the market's going to retrace, for example, I think it's going to go against the trend, I have a tendency I like to go contrary to whatever market expectations are, then there are contrarian strategies as well that will go against the technical overview if you believe that the technical overview is going to shift, or if you believe there's going to be a break in the current key technical indicators. And here we look at three main ways to trade. So first off, you can either go with a breakout strategy, so you decide to go with it, with the flow, or this is especially true when it comes to volatile scenarios or big fundamental factors at play, and you decide to go with the flow instead of going against it. The second way to do it is reversals. That is, you're going against the move, but you're waiting first off for the level to be breached, and as it's coming back down, then you go ahead and initiate, for example, a sell. And this is usually ideal when there's high volatility, but you expect eventually for the market to go back in the direction of the trend. So for example, if the market's dipping, but it's a bull trend, and you feel that the bull trend's gonna survive, well, if that's the case, then as the market's, you wait for the market to come back first, and then you go ahead and you initiate your buy. Now, lastly, there's fading, of course. If you decide to go against the market move, at or before the level, and this is a case where usually you're trying to pounce onto that opportunity and you're trying to get that opportunity because you don't want to miss out. This is especially true when there's a lack of volatility, when the market's relatively range bound. You don't really want to wait for a reversal because you might miss out on that opportunity. However, usually fading is more prone to stop outs, especially in volatile times. So let's take a look at levels next, and you can see that when it comes to the first levels, first resistance and support, this is sort of the first line of defense. However, there are second support and resistance. They're much more rarely breached unless there's significant volatility or significant fundamental news. And then, of course, you got your stop losses, and this, of course, is to help limit your losses. Again, you don't have to stick to these exact ranges. You don't have to stick to these exact figures, but it is important to have that structure and to organize your thoughts and to organize yourselves and to make sure, of course, that you put stop losses in place to limit your risk, and especially to keep a healthy risk-reward ratio. These levels, the stop losses, and so on, this is for the daily market report on a daily basis, whereas for the weekly, it'll be on a weekly basis. It'll have a weekly levels in terms of the overview. So let's move on next to the charts. You can see pretty straightforward stuff. In this case, we have a daily chart, and that means that every bar there represents one day, or where price has gone within that specific day. For the weekly market report, it's going to be a weekly chart. And same thing when it comes to the moving averages. We have the 50, 100, and 200-day moving averages. You can also apply these to your charts on the IG platform. We do have platform videos that you can watch, which will help you understand how to apply these technical indicators, including moving averages, to your charts. But 50, 100, and 200-day moving averages, and in the case of the weekly chart, the 50, 100, and 100-week moving average. There's also something we've added, and that's the retail and institutional sentiment onto the chart. And here what we've done is we've mapped sentiment. Blue dotted line for retail sentiment, green dotted line for COT sentiment. And the idea behind here is, if you want to know how is it that retail traders have gotten to become majority long, or how is it that COT traders have gotten to become majority short, you can take a look at the chart and you can see how prices progressed, what they did, where they took profit, where they started to initiate, and it gives you a much better idea of how they formed this bias and how it is that they got to where they are today. So that's something in terms of sentiment. That's a key feature that we've added to the charts more recently, and we hope that you enjoy that aspect. Last but not least, it's the commentary right behind me. Now, this commentary, I have a tendency to note technicals, fundamentals, as well as sentiment. I mentioned before that on Mondays I will talk about in detail what's happening in terms of lot sizes, what's shifting, how many lots have been added, and how many shorts have been reduced, for example. So that's something that we are going to add on the commentary on Mondays. I'm also going to note fundamental items. It's always important to have a healthy mix in terms of understanding what's going on in the market and if it affects either aspect of the pair. So in the case of Euro USD, if there's Eurozone CPI, if there's US GDP, I will note it in the commentary section if it's significant, usually mid to high impacting data. And if there's a really big fundamental item, like in the case of Euro USD, European Central Bank announcement, non-farm, or say US Central Bank announcement, the Fed, then if that's the case, technicals usually should be shelved. Pivot points are much more easy to break, so you shouldn't assume that technicals are going to hold when you have a significant fundamental event going on. So why is it then that we mention technicals on a day, on such a big fundamental day? So for example, on Friday's non-farm, why is it that we're still showing technicals? And the reason why is, first off, people like to know what the technical overview is, and they like to note technicals as an overall healthy mix to whatever it is that they're trading. Second of all, there are traders out there who just prefer to trade technicals. We're not here to judge. That's up to you, because at the end of the day, our job is to gather all this information and put it in one place. We do the hard work of getting all this information so that you can make an informed decision far more quickly. So we hope that you enjoyed this video of interpreting the daily and weekly market report. From all of us here at IG, thank you so much for watching, and as always, happy trades.